Imagine this. Every time you pay rent, every time you make an M-Pesa transaction, and every time you could get a smartphone from that shop, the government could be taking a little more from you. So the Finance Bill 2026 is here with us, and on this episode, we break it down to know how it would affect you.
National Assembly and National Assembly and the entire leadership of Parliament and the members of Parliament for granting me opportunity to speak for well over 2 hours. Today, in a nutshell, was a day that is provided in our statutes, in our laws, Public Finance Management Act of 2012.
Finance Bill 2026 has already sparked national debate, with critics warning that some of its proposals could increase the cost of living and tighten the tax burden on ordinary Kenyans. At the center of it all is the Kenya Revenue Authority, KRA, which is being positioned to operate under a more digital and stricter enforcement system. Under the current framework, taxpayers have up to 6 months to file returns, usually ending on the 30th of June, but under the proposed changes, that window could be reduced to about 4 months, meaning tax filing will need to be done much earlier in the year. At the same time, KRA is expected to rely more on digital systems and financial data tracking, giving it greater visibility over transactions for both individuals and businesses. This means freelancers, small businesses, and salaried workers may face tighter compliance timelines and stricter enforcement going forward. Not one of the most talked about proposals, mobile phones. The bill proposes increasing excise duty on mobile phones from 10% to 25%, while at the same time removing VAT on the devices. There is also a shift being discussed, where taxation may apply when a phone is first activated rather than at the point of import. In simple terms, the final cost of smartphones could either rise or fall depending on how these changes are implemented.
There is import declaration fee of 2.5%, and there is railway development levy of 2%. If you add all that, it's coming to almost 55%. Now we are saying we collapse all these taxes into one, which is excise duty, which is currently at 10%. We make it 25% and do away with all other taxes on phones. But now the point of levying the tax is shifted from the point of entry to when you are activating your phone.
Then there is Kenya's cashless economy. From M-Pesa to bank apps, card payments, and till numbers, digital transactions now dominate everyday life. But the Finance Bill 2026 introduces proposals that could extend taxations to digital financial services and transaction charges, meaning every time you send money, pay digitally, or transact electronically, there is a possibility of small added costs that accumulate over time.
You see, for example, the Visa card and the MasterCard. There are these people who provide these platforms to the banks. And banks charge interchange fees. Now, when these people are paid by the banks, are they supposed to just enjoy that income without paying tax?
Housing is also affected. Some tax incentives for affordable housing developers may be removed, pushing them back to standard corporate tax rates. Enforcement is expected to become stricter. And although tenants may not see an immediate direct tax increase, higher costs for landlords could eventually reflect in increased rents. When you put all these proposals together, KRA filing changes, phone taxes, digital transaction costs, and housing pressures, the Finance Bill 2026 becomes more than just a tax document. It becomes a blueprint of how Kenya plans to raise revenue in a digital economy. If passed by Parliament and assented to by the President, the Finance Bill will become law and take effect from 1st July 2026 at the start of the next financial year. But before that happens, the bill will go through public participation, parliamentary debate, possible amendments, and final approval. So nothing is final yet, and that is where the debate now stands. A bill that could reshape how Kenya's Kenyans earn, spend, and transact still under discussion, but already sparking national attention. The question now is just what is in the finance bill, but how it will affect your everyday life. Christabel Njeri, and this is PMTV.